Hello everyone and welcome back. Let me start with a question that almost every revenue manager tries to answer every single day. And that is, when does a demand actually enters the system? Are guests booking far in advance or months in advance, or are they booking happening just a few days before arrival, like that? In revenue management, we call this the booking window, which simply means the time between when a reservation is made and the arrival date of guest. Now, many revenue teams have done analysis on booking window, and but very often that analysis stops at the monthly summary level. And while that gives us a general direction, it doesn't always tell the full story, right? For example, the monthly report might show that the bookings came within 0 to 7 days before arrival, and at the first glance, that might set a strong last minute demand. But when we actually look a little deeper, something interesting often happens. And that pattern might actually be driven by just a few high demand dates like weekends, event dates like that, while the rest of the month behave very differently. So if we only rely on the monthly view, then we risk making pricing or inventory decision based on incomplete demand signals. And as a perspective of revenue managers, that's not what we want, right? So we want to understand both the overall demand pattern as well as the specific dates that are actually driving the patterns. And this is exactly where the booking window widget inside RevEVOLVE becomes extremely powerful. RevEVOLVE provides two complementary views that works together. One is monthly booking window widget and another is day-to-day booking window widget. As you can see here in the snapshot, this is the monthly booking window widget, and in the day-by-day booking window activity, it gives the day-to-day analysis of booking window. As you can see here, it is the day-to-day booking window widget. So when you combine these two views together, booking window analysis moves beyond simple reporting and becomes actionable revenue intelligence. So before we jump into the widgets themselves, let's quickly understand how these two views connect. Think of it like this. The monthly booking window gives us the big picture and it shows the overall booking behavior for an entire month. From this view, we can start answering questions like, are guests booking far in advance? Are most booking happening close to arrival? Or which booking window contributes the most in revenue like this? But the monthly view alone doesn't tell us which specific arrival dates created that pattern, right? And that's where the day-to-day booking window becomes important. The daily view breaks the data down by individual arrival date and allowing us to see exactly which dates are driving those booking patterns. So, in simple terms, the monthly view tells the story and daily view explains the details behind that story. Let's start with the monthly booking window widget. If you are seeing this widget for the first time, here is how to read it. At the top of the widget, you will see the filter, and here is the market segment filter. This allows us to analyze booking behavior segment by segment. And here are all the market segments listed here: unmapped, wholesale, brand discount, corporate, like this. And this is important because different segments often behave very differently. For example, corporate demand usually books closer to the arrival date. Brand travelers books much further in advance. When if I select brand discount in this market segment filter and then apply this filter to the booking window, then we can see that the 90 plus day window is full. That means brand travelers often book much further in the advance. And OTT demand usually sits somewhere in the middle of the booking window. So, by simply changing the segment filter, you can instantly see how booking behavior changes across segments. If I select one more market segment with the brand discount, which is corporate discount, and then apply this filter, then these results are of brand discount market segment as well as the corporate discount market segment. And here also you can see that the 90 plus day window is full. That means guests are booking much further in advance. So, and that will help us to know that how booking behavior changes across different market segments, right? And this helps revenue managers to avoid very common mistake, which is averaging different market segment behaviors together, which can easily hide the valuable insights. Now, let's look at the core of this widget, which is the booking window distribution table. This report divides bookings into multiple linked time buckets. such as the 0 day, 1 day, 2 to 7 day, and up to 90 plus days. Each category represents how far in the advance the reservation is made before arrival. So, by looking at this distribution, we can clearly understand when demand is actually enters the system, right? And for each month, the widget also shows the important metrics such as room sold, ADR, means average daily rate, and the revenue. And when we combine booking timing with these financial metrics, we begin to understand not only when guests book, but also how valuable those bookings are. Another useful feature in this widget is the highlighted cell within each row. If you look at each month, each one value is highlighted. For example, in the April and 31 to 60 days of booking window, this 88 value is highlighted. That means that the highlighted cell value represents the highest contribution among all the booking window for that particular month. So instantly without scanning every number, we can identify that which booking window dominated demand during that period. For example, if the 90 plus day window is highlighted, that suggests strong early booking demand. If the 0 to 1 day window is highlighted, that indicates the property is relying more heavily on last minute demand. This simple visual cue makes it much easier for revenue managers to spot patterns instantly. Now, let's move to the day-to-day booking window widget. While the monthly view shows the overall pattern, this widget provides much deeper operational insight. Here, each row represents a specific arrival dates. And just like the monthly view, the booking windows are again displayed across multiple lead time categories like 0 day, 1 day, 2 to 7 day, and up to 90 plus days. Once again, the highlighted cell shows which booking window contributed the most bookings for that particular arrival date. And but this widget introduces something even more powerful, and which is STLY, means same time last year. This allows revenue managers to quickly compare today's bookings with the same booking position last year. With this comparison, it becomes much easier to understand whether demand is building earlier than last year, coming in slower than historical trends, or simply following a similar booking patterns like that. This historical context helps revenue managers evaluate demand much more confidently. Now, when we analyze both widgets together, several important insights start to appear. For example, we can identify weekends that rely heavily on last minute bookings. We can detect weekdays where forward demand is still limited. We can identify event dates that book much earlier than usual. And also, we can quickly see whether current booking pace is ahead of or behind last year's trend. These insights help revenue managers move beyond simple reporting and toward a much deeper understanding of demand behavior. Once we understand the booking window distribution, it becomes much easier to take clear revenue actions. For example, looking at January through March, we can see that the most revenue comes from 2 to 7 day booking window. In February alone, this window generated around $39,000 in revenue, and this suggests strong last minute demand. So, pricing should be actively optimized during the final week before arrival. Now, if we look at the April 31 to 60 day booking window, generating overly $21,000 in revenue. And this tells us that demand started building earlier, so inventory should be protected earlier with gradual rate increases. For May, June, and July, the 90 plus day window contributes the majority of revenue, including $50,000 alone in June. This clearly indicates strong early booking demand, which means early discounting should be avoided and pricing confidence should remain high. And finally, the months like September already show very high ADR in the 90 plus day booking window. And this tells us something very important, which is early bookers are already willing to pay premium rates. So at the end of the day, revenue management is not about staring at numbers. It's about knowing when to act and having the confidence to act early. If you want to stop reacting to pickup and start pricing with clarity, we invite you to see PaceIQ and Booking Car Live. So book your demo